okay, we're going to attempt to catch a falling knife, right? We want to pick the exact bottom of the market. Now, the first strategy to do it is pretty simple. Is the amount of time that you spent from the previous all-time high. Now, it usually takes about 1 year for the price to go from all-time high to the bottom of the bear market. So that means that if you have 365 days, you should expect to be at least close to the bottom of the market, right? Now, in regards to Hex topped in September, I think around the 21st of September, so we should expect a bottom around about there. Now, people could front run that opportunity because most people are eyeing the same date. Now, this bear market is a little different than other bear markets, so there's other factors that you need to take into consideration. Usually, time should be a good strategy to just to know where you are within the 4-year cycle, because the 4-year cycle is based on time. It's based on Bitcoin's having a cycle which happens at specific periods of time. Now, another thing that you need to look at is we've had a lot of FUD and a lot of bad actors in the crypto space being caught out, a lot of companies that were taking risks that they shouldn't be taking. We're getting a lot of liquidations, we're getting a lot of bankruptcies. We should expect all of that to die down, right? When it dies down and quietens up, then you should expect we're at least near the bottom. Because right now what we have is we have the collapse of Terra Luna, right? And that causes some after effects. It affects other players as well. We have what's happening with Celsius, right? We've got what's happening with 3 Arrows Capital, right? We've got all the stuff that's happening that's going to have effects on other projects, in fact causing others to be liquidated. And right now, if you take a look at it, Celsius is a position of I think 500 or 400, over 400 million Bitcoin that will be liquidated at a price of $13,000 Bitcoin. Now, a lot of whales are going to be eyeing to get that position liquidated to dump the price of Bitcoin down so that they can buy cheaper, right? So you're going to have a lot of those kind of things happening where you have big players who want to drive down the price. When all of this stuff dies down, when all of these financial engineering, maneuvering, all of that stuff dies down, then you should expect that, yeah, we should be at least near a bottom. Another thing is inflation, right? We should expect inflation to stabilize as well. As long as inflation keeps going up rampant, you're going to have the response to that, higher interest rates. Higher interest rates makes money more scarce. And if money is more scarce, these type of assets like Bitcoin, cryptocurrencies, which are retail-led phenomenon, they will not do that well. How could they do well if retail is being squeezed? Retail is being squeezed on two ends, right? First of all, inflation, which means that your money doesn't buy as much as it used to. Second of all, you've got higher interest rates, which means you don't have as much money as you had before. So when you have retail being squeezed like this, retail can't put money into Bitcoin, into crypto. So we need inflation to stabilize, and then we need interest rates to stabilize as well. Once we hit a sweet spot of the perfect interest rates that don't cause inflation, and that where the economy can start flowing again, right? Now, obviously, there's a lot of things that comes into that. You also have oil prices there that need to drop, and all that other good stuff. But I don't think bad times do not, or tough times, right? Not bad times. Tough times do not last forever, right? So we will get through this. But that will be another sign which I think we should start to expect pretty soon. We should start to expect at least some inflation to stabilize at some point. It cannot go the way it's going forever. Now, there are other strategies as well, right? PulseChain launch. I think PulseChain launch will be a big signal because we do know that the founder, Richard Hart, predicted the top of the market, and he's most likely going to want to launch PulseChain at the bottom of the market so that people have a big opportunity to dollar cost average at key prices before we all go to the moon. So that's another indicator. Another thing in regards to PulseChain, right? If you take a look at the Pulse X sacrifice address, it's sitting massively on stable coins. I do think that Richard Hart would want to deploy that at some point. I don't think he would like to sit in stable coins with hundreds of millions of dollars not getting any yield. I think he would want to get into something like maybe dump that into Ethereum, especially at the bottom, right? Now, I don't think he obviously wouldn't buy his own assets because he doesn't sell his assets. And if he's going to be doing it to earn some yield, he's got to, not to earn some yield, to get capital appreciation. He's going to buy something like Ethereum, so that when it goes up, he can mercilessly dump it. So I do think that Richard Hart will deploy some of those assets. Once we see those stable coins start moving, being converted from DAI to USDC, being to some other assets, you better believe that he's probably going to be buying some Ethereum with that. Because I do think that's the only asset that he would buy, because obviously it's the second most stable crypto asset out there, has better price performance than Bitcoin. So he's most likely going to deploy that into Ethereum at some point. So when you see those coins start moving, it'll tell you that, hey, I think we are we're a lot closer to the market bottom than not. All in all, right now we are at a point of max pain, right? The price of Bitcoin dipped to $17,000, right? So it's looking like, yes, we might hit those really low numbers, and we might get more and more liquidations. We are still in that cascading position, but I do think that the prices are looking good right now for anyone who wants to buy. And however, I do also think that I'll just address one question. Someone asked me, why are you not covering this coin and that coin and that coin? Now, I do want to cover all the coins, but I want to cover the ones that give you the best chance of success. Right now, we are getting at a point where really good, high quality assets are cheap. I've never believed in buying Bitcoin, right? Because I think that the risk reward is very low. But if the price of Bitcoin dips a lot, and Bitcoin is probably the safest asset that anyone can hold, yeah, it becomes a good asset to buy. Why would you buy some risky coin when you can get 20, 30, 40, 50x on Bitcoin? With when you know that it's most likely going to survive. There are assets that are going to live long, and there are assets that are not. So if I think if you want limited risk, high upside, I think the Richard Heart ecosystem is the best, right? But Bitcoin is still the biggest, still the most liquidity, still has massive advantages, most accepted by regulators. So it still has a position. For those people who want 10x, 20x, 30x with limited to less risk, I think Bitcoin is a good play now. It's not risk-free completely, right? There's nothing like that. It could be the MySpace of crypto. But I think it's still fairly stable-ish enough, right? So I do think that altcoins, the smaller ones, at this point, they're not as attractive as the big, more established ones that have a bigger chance of surviving, that have bigger ecosystems. Right. Yeah. So that's what I think about them. That's what I think about the market. So I will cover if I really see a good gem that I think is a home run. But I do think that people should focus on the big fundamentals, right? And the Richard Heart ecosystem, great for if you want massive gains, and also great for Hex has proven itself over the last 2 years. So that's good. But if you don't want any risk at all, you just want and I think Bitcoin still is good, and Ethereum as well, right? At least Ethereum is better than Bitcoin because obviously there's some evolution going on there with Ethereum 2.0, and there's a lot of building happening, right? Hex is built on Ethereum. Most NFTs are on Ethereum, right? A lot of DeFi applications are already on Ethereum. PulseChain is a fork of the entire Ethereum system state. So I do think that Ethereum still has some merit of holding Ethereum. And if the price of Ethereum does go to like a $400, that would be cheap. But it still doesn't have great upside. The upside is probably to the next top 20x, right? But yeah, it still has not great upside, but it's still a lot safer than some of the other riskier assets out there. So, but if you do want 100x, 200x, 1000x, I do think that the Richard Heart ecosystem is the safest place to play to get those returns, in my opinion. Right now, obviously, none of this is financial advice. It's all my opinion. So yeah, thank you guys for watching, and see you again next time.